Welcome to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. And here is your host of Dollars and Cents, Sanjiv Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjiv Gupta, CPA. I just came back from my trip to India, and I belong to Delhi, so I traveled to Delhi. My flights were full. I know people are thinking of traveling for next two months till December 31st or January 15th. The tickets are not available. It's just crazy out there of getting the tickets, and the prices are very high. My experience while being there in India has always been something not surprising, because I see there are not many things have been done to change the infrastructure, to change the thinking of the people out there. And sometimes it's really sad to see the politicians not doing things they are supposed to do to make this country, to make the country very good, or very, very, ranking in the high numbers as compared to other developed countries. One example I want to give here, I'm not bashing India, just I'm Indian. I'm as Indian as anyone else. I just want to change my phone number on my bank account. It took me like a couple of days, couple of visits to the bank, and they signed several documents to change one phone number, which you can easily do it here online. And did I ask this question to the bankers there? Why you're making me sign this document to change a phone number? They said they don't know. They just have to follow the process, and they let me sign like 3-4 pages. I don't even know what I'm signing on it. That's how the system works. And I just was thinking, what will happen to people who are looking to change their addresses, to do their KYC filings, to do what happens in case of beneficiaries who wants to get their money out from the bank accounts? What will happen to the money that they want to transfer from there? What will happen? What can happen to the things that they want to change? The properties, the inheritances and gifts and other things. The processes are too long. Bureaucracies and red tapeism are very much evident there in that country. So if you're thinking of planning to go to India, if you're thinking of doing things that you want to accomplish by going there, take sufficient time and be ready for red tapeism out there. And you have to have sufficient time to do all those things. This is Sanjiv Gupta, CPA. We are giving this show every Wednesday, 6:30 p.m. to 7 p.m. Dollars and Cents Show is the name of the show. Listeners, if you have any tax question, this is the time to connect with me on air. Studio lines are open. Studio number is 408-912-5038. 408-912-5038 is your studio number. You can call in with your tax question anytime. 408-912-5038. In our dollar update today, we have this infrastructure Jobs Act that was passed into law by President Biden on November 15th. It did not have any tax provisions which can be impacting individual tax filers. It did have some tax provisions for reporting which can impact the individual tax filers when it comes to cryptocurrencies. In the cryptocurrency space, they have expanded the definition of broker to include anyone who, for consideration, effectuates transfers of digital assets on behalf of another person. For these purposes, digital asset is defined as any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology. It's a very, very confusing definition. Simply, it's providing information to the IRS like a 1099 brokered statement for stock reporting. The same kind of reporting will be there for IRS. And people who are trading in cryptocurrencies and find no way of providing proper reporting will be coming for a surprise when they will come to know that there will be reporting for those transactions and reporting to IRS. Remember when this 1098 broker statement was there and they started reporting the stocks and everything, we thought this is not going to be accomplished, but it took some time, some years, but now we just report the total value of the stock trading, long term, short term, and this information is there with IRS and everything is there with IRS. It will take some time, but definitely this crypto reporting will be there. By the way, in my tax topic today of the show, I will be covering some aspect of crypto reporting, which is an important area of planning for this year, and we can look into that in my dollar topic of the show. We are doing a webinar on December 11th. December 11th is our webinar on year-end tax planning. Year-end tax planning for 2021. Listeners, people have made a lot of money, whether on W-2, whether on businesses in this year. And people have received a lot of benefits from the IRS, from the Congress. Child tax credits, American Rescue Plans have provided a lot of benefits. So it will be a year where reporting is required, complicated. Tax filing will be done for next year, for this year. So we are going to cover a lot of areas of tax planning topics for individual tax filers and business tax filers. The steps they can take for the next 19 days after they attend my webinar on December 11th that can reduce their taxes to substantial levels. Remember, the webinar is on December 11th. For registration, they can go to my website, sanjivcpa.com, SANJIVCPA.com. And December 11th is on year-end tax planning webinar. 408-912-5038 is the studio number. For any tax question, studio lines are open. My firm, Sanjiv Gupta CPA, has offices in Fremont, Sunnyvale, and Pleasanton. And we have a team of experienced CPAs and CAs and EAs and accounting professionals, all ready to go for your assistance, for your tax questions, to help you out in your problems, tax problem solving areas. They not only understand the US tax rules and regulations, but also with Indian tax rules and regulations. My staff, my people speak multi-languages, and they are available year-round and not just during the tax season. Myself, not only a CPA, but also an experienced chartered accountant, having practiced in India for several years before coming to US. So very well versed with US rules and regulations, as well as Indian tax rules and regulations, and which has really helped all my clients with respect to compliance for so many years. They have been successful. Our firm has been successful in making those people compliant with non-reporting of prior year, foreign account reporting, and foreign income reporting requirements using the amnesty program to the fullest extent. My webinar again is on December 11th, so this is time to go and register on the website, sanjivcpa.com. 408-912-5038 is the student number. Listeners, you can call me and get your tax question answered. One of the other thing in the infrastructure bill that got passed was about ERC, which is Employee Retention Credit. ERC is nothing but giving a credit to business owners who have eligible employees equivalent to 70% of their wages, maximum up to maximum up to $7,000. 70% of 10,000 equal to $7,000 per employee on a quarterly basis, first quarter, second quarter, and third quarter, provided there's a decline in the revenue of the business owners for that quarter, which makes them eligible for the ERC as compared to the corresponding quarter of 2019, and drop should be more than 20%. In case the drop is more than 20%, they become eligible for ERC for that quarter. And they can get credit equivalent to the payroll wages, employer payroll wages, payroll wages paid, not the employer payroll taxes, the wages paid to those employees, subject to that qualifying amount. So that was there earlier for quarter one, quarter two, quarter three, and quarter four. With the infrastructure bill that got passed, the quarter four has been taken out, and they're saying that this ERC will be terminated early. And so that will be one of the changes that will happen. So no quarter four benefit for clients, for business clients who are looking to get those ERCs. So that's the other impact of that bill that got passed. Other than that, not many tax provisions are there, certainly. So we're looking forward for the other big plan for President Biden. We're still waiting for the $1.75 trillion plan, tax plan, we call it. I don't know whether it will be passed. We're running short on time. It's already November 17th, but we know how the Congress works. It has been a history of sort for this country, when we know at the end, at the 11th hour, they may do some changes. You remember the Obamacare? It was passed by President Obama on a piece of paper. It was just passed on a piece of paper, and when it came into details, it was into pages and pages. 500 pages of that was there. And same thing happened with Tax Cuts and Jobs Act. So we don't know. It can be at the 11th hour we see that passing of that regulations, and it can change. It can do anything to your bottom lines, because it can change the capital gains rate. It can change the income tax rate. It can change the way that we do planning. But then we have to deal with what we have. We have been dealing with that, but at least we know we can take some steps to reduce the income taxes for whatever we can do for going forward. And that's why we have this webinar on December 11th. Studio lines are open. 408-912-5038 is your studio number. You can call in with your tax questions and connect with me, CPA on air, Sanjiv Gupta, CPA. In today's topic, I told you we are going to talk about something important concept about cryptocurrencies. We have one caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hi. I had a question regarding two things. One is with remote working, if we are using part of our personal property for the office work, can we claim that in the tax return? And even if we are on W-2. And the second question is if we already have the 401k and due to the income not eligible for the Roth IRA, and we are doing the backdoor Roth IRA, what are the precautions we should be taking? I can take the answer offline.
So before you go offline, I need to, because there was some interruption in the lines, I need to understand the first question. So your first question was relating to you're working from your home, and right. So you want to claim that home office deduction, right? That was your question?
Right. Yeah.
And the second question was about your 401. You have 401k, looking to invest in a Roth IRA or something?
A Roth IRA, but suppose due to the income, you are not eligible and you want to do the backdoor IRA. So you first transfer to the traditional IRA and transfer to the backdoor. So what are the precautions you should take that you don't go wrong with it?
Okay, so you're looking at backdoor Roth IRA details.
Right.
Right?
Yeah.
Right. That's good. So yeah, you can take offline. I can answer for the benefit of all the other listeners too. So very important question. Both the questions are important. So a lot of people on W-2s are working from home. Of course, big companies, even mid-sized companies have not started calling employees to office. And maybe next quarter, maybe you'll see some kind of hybrid model where 1 or 2 days you go to office and rest you can work from home. Maybe second quarter of 2022, if everything goes well, maybe you can see people going to office very frequently. So in that case, what happens when people are working from home, they want to utilize all this home office expenses as a deduction on this W-2 income because they're working from home. Unfortunately, with the Tax Cuts and Jobs Act changes, the Schedule A, which was listing all those expenses, which earlier you can use those expenses on the Schedule A, itemized deductions, which are subject to 2% AGI floor. All the expenses you can claim that if it exceeds 2% of AGI unless your W-2 income. But unfortunately, with Tax Cuts and Jobs Act, those expenses have been taken out. You cannot take any home office expenses against your W-2 income. You need to have a business to claim those home office expenses. That's why I keep saying and keep telling and keep saying for a long time, do some kind of business, do some kind of activity outside your normal W-2 income so that you can claim those benefits of the home office expenses. Unfortunately, you cannot claim this against your W-2 income. Another way would have been you could have connected with your employer. They could have provided you money for setting up your home office. A lot of employers have provided that. The IRS has provided a benefit. If your employer provides money for setting up your table, chair, comfortable chair systems and everything, and they pay you and you put that money and you give them receipts, it's not taxable to you and it's deductible by the employer as expense. A lot of companies have done that. If you have not done that, unfortunately, you cannot take those expenses against your W-2 income. Like coming to backdoor Roth, anyone can do a backdoor Roth. Anyone can do a backdoor Roth. It's a very important strategy. It's not related to income. If you're doing 401k, you can still do backdoor Roth because there's no limitation on income. You need to have a traditional IRA account set up, and you need to have a traditional IRA set up. But with traditional, if you have a traditional IRA with pre-tax money, you cannot do this backdoor Roth unless you empty that pre-tax money. You can do only this backdoor Roth with post-tax money. That means you cannot have traditional IRA anywhere else with pre-tax money. So if you don't have pre-tax money in traditional IRA, you can open a traditional IRA, put after-tax money into this, like $6,500 per person, subject to inflation, index to inflation every year. And then you can convert to Roth IRA immediately. If you wait and convert later on and there's a growth in those IRAs, there's a problem because then proration comes to picture. So definitely backdoor Roth is important, and you definitely can file a form 8606 with your tax return when you do that every year. When you can do that, that's excellent strategy. I would recommend this for any person anytime because it converts to Roth and you can grow tax free and you know all these benefits. Thank you for that call. And listeners, if you have any other questions, you can definitely connect with me on air. This is a time to connect with me with your tax questions. A lot of people have a lot of tax questions. We're getting this one after the other. In fact, my consultations are very full till December 15th, but definitely this is a time to connect with me on air. Again, the studio lines are open. Studio number is 408-912-5038. 408-912-5038 is the studio number. And you can connect with me on air with your tax questions. Now coming to this important tax topic about the cryptocurrencies, was sales rules does not apply to cryptocurrencies. So if you are dealing in cryptocurrencies, then you can sell the cryptocurrency at a loss and buy back the cryptocurrencies within that 30-day period because there's no was sale rules applies. And you can use that to your advantage if you're dealing in cryptocurrencies to set up that loss against subsequent stock trading. So that's an important rule. I'm not telling you guys to invest in cryptocurrencies, but I know a lot of people do cryptocurrencies and they are afraid of was sale rules. And what is was sale? Was sale is when you sell or trade a security at a loss and then buy back within a short period of time, let's say 30 days, that's a watch sale. But that watch sale does not apply to cryptocurrencies. The IRS classifies virtual currencies like Bitcoin, Ethereum, Dogecoin, or even Shiba Inu as property. They are treated as capital gains. So this means crypto investors are subject to same taxes on capital gains and losses that apply to other investors, and with one difference, which is the watch sales. So you can use this to your advantage. You can definitely use this to your advantage to lower your taxes on capital gains overall. So why this is a watch sale? Why there's a watch sale rule? Because the intent behind the watch sale rule is to prevent the creation of artificial losses and manipulation of tax laws by trading in and out of the stock for the purpose of harvesting capital losses to offset capital gains or income. By the way, harvesting capital losses is one of the excellent strategy one should always use. You should always record losses on your stock portfolio and buy back the stock after 31 days. But you have recorded that losses, you can use $3,000 of that loss every year unless you have other income, or you can carry forward that loss and start out of capital gains. So it's a very excellent strategy of harvesting losses. Let me take this caller. I have a caller here. Let me take this call. Good evening, this is Sanjiv Gupta, CPA.
Hi, this is like this generic question. I keep listening to your show. It's a great show. At what point do we reach out to tax advisors in my career? Like, at what point, I don't know, like when I reach $150,000 a year or $200,000 a year or whatever. Like, at what point do you recommend reaching out to a tax advisor so that we can plan our taxes in a better way?
Very good question. What is the time? Do you need a tax advisor? That's the question people do ask. See, if you're having a simple W-2 income, means you're making 100,000, 150,000, don't have any complexities, don't have a house or don't have any business income or don't have kind of retirement distributions or kind of other complexities, you don't need a tax advisor, but preparing taxes and advising on taxes are two different things. So preparing taxes, you don't need a CPA or a tax person to file your taxes with that simplicity, with no complexity. But you have to plan your things. For example, when you want to set up your 529 plans, what are tax rules and regulations? What about retirement? What are the contribution to 401k? When you can pull that money out? What happens if you decide to go back to India? What happens if you come back from India? What happens to your buying a home? If you want to buy a primary home, what are rules and regulations? What tax deduction you can do? How to set up a home office? When to start a business? So all those things are important planning point of view. So if you start early and connect with a tax advisor and get all the pointers to your situation, you can plan your things in a better way and you can do those things like step by step, and you will be tax efficient person, and you will say, oh, I took the advice, now I know what to do and I can go forward. So it's important not from a tax preparation point of view. If you're simple, it's not a dollar amount, but advice is something you should take from a professional, and CPA is the right person to connect with. Okay?
Yeah, thank you.
Thank you very much. And we are coming to close of this show. But again, just to remind the listeners that we have this webinar coming up on December 11th. It's a great webinar, year-end tax planning tips for individual tax filers and business tax filers. For registration, you can go to my website, sanjivcpa.com, SANGIVCPA.com. You can connect with me through offline by calling my office number 510-825-7563, 510-825-7563, or you can visit my website, sanjivcpa.com. With that, I appreciate all of you listening to my show, and I will connect with you again next Wednesday, same time, 6:30 to 7 p.m. in my show, Dollars and Cents. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjiv Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjiv.